US-Canada trade talks. Big developments in the US-Canada trade relationship are keeping market on alert. Trade negotiations and tariff disagreements could affect manufacturing commodities, supply chains, and the broader North American economy. For traders, keep an eye on US dollar, Canadian dollar, crude oil, and global equity sentiment. Any escalations in tariffs could increase volatility across sectors connected to the international trade. So don't trade headlines blindly. Wait for confirmation from price action and manage your risk carefully. White House Ballroom project and US fiscal policy. A major US political and spending story is attracting attention. The proposed White House Ballroom project, reportedly involving hundreds of millions of dollars. Why should traders care? Large government spending decisions can influence construction activity, government contractors, fiscal policy, and investor sentiment. But the bigger market story remains the US government spending and borrowing position. Traders should watch US Treasury yields, the dollar, and US equity markets for potential reaction. Strait of Hormuz and crude oil. The Strait of Hormuz remains one of the biggest geopolitical risks for global energy markets. Any escalation involving Iran or disruption around this critical shipping route could create sharp moves in Brent crude, WTI, gold, and global equities. For India, higher crude prices can also impact inflation, the rupee, and market sentiment. So traders, keep crude oil firmly on your watch list. And remember, when geopolitical headlines hit, don't chase sudden price spikes. Wait for confirmation, manage your position, size and protect your capital. US national debt and market risk. The US national debt remains a major issue for global investors, with debt levels crossing the $40 trillion mark according to the headline being discussed. Why does this matter? Higher government borrowing can influence treasury yields, the US dollar, inflation expectations, and equity valuations. For Indian traders, movements in US yields and the dollar can also influence Nifty, Bank Nifty, and foreign investor flows. But remember, high debt alone does not automatically mean a market crash. Watch the data, follow treasury yields, and trade the price action. India Mauritius Oil and Gas Cooperation. India and Mauritius are strengthening cooperation in the oil and gas sector with agreements involving petroleum products and energy supplies. These developments highlights India's growing role as a regional energy and petroleum product supplier. For investors, the focus should be on companies connected to refining, fuel distribution, and energy infrastructure. Traders should also watch Indian oil refining margins and crude oil prices. If global crude remains volatile, energy stocks could see significant sector rotation. Keep the news on your radar, but always confirm the trend before taking a trade. Another major geopolitical development involves US pressure on Iran. Reports indicate that President Trump is threatening sanctions against countries and traders involved in Iranian trade. Iran has rejected the pressure, increasing concerns about further geopolitical escalation. Now, why is this important for markets? Any escalation can quickly impact crude oil, gold, currencies, global risk sentiment. For Indian traders, watch crude oil, USD INR, Nifty, and gold closely. Geopolitical headlines can create sudden moves, so avoid emotional trading. Pakistan-US tensions over the Kashmir remarks. Pakistan has reportedly summoned US diplomatic following remarks concerning Jammu and Kashmir, creating fresh diplomatic tensions. While this is primarily a geopolitical development, traders should understand its potential market impact. Any increase in regional tensions can affect investor sentiment, currencies, and market volatility. For Indian traders, keep an eye on Nifty, Nifty Bank, USD/INR, and broader risk sentiment. But remember, one headline does not define the market trend. Follow the actual price action, avoid panic, trade and protect your capital. US push for chip and pharma manufacturing. The US is continuing its push to expand domestic semiconductor and pharmaceutical manufacturing. The administration is encouraging companies to manufacture more products inside America, while tariffs could be used to pressure companies that keep production overseas. This could have a major impact on semiconductors, pharma, technology, and global supply chain. For Indian traders, keep an eye on IT, pharma, and manufacturing stocks. Changes in global supply chains can create both opportunities and risks. India-Russia strategic cooperation and Bitcoin selling pressure. Today we have two important developments to watch. First, stronger India-Russia strategic cooperation could have implications for trade, energy, and international economic relationships. At the same time, Bitcoin is facing selling pressure, putting cryptocurrency traders on alert. For the broader market, geopolitical developments can influence oil, gold, and currencies, while Bitcoin volatility can affect overall risk sentiment. Keep Bitcoin, crude oil, gold, and Indian indices on your watch list. Most importantly, don't chase a falling market. Wait for support, confirmation, and a clear risk to reward setup. IT sector outlook on global markets. The IT sector remains an important area to watch as global markets react to technology spending, AI developments, US economic conditions, and changing business demand. For Indian investors, movements in the US technology sectors can have a major influence on Indian IT stocks and Nifty sentiment. Watch global tech trends, the US dollar, Nasdaq movements, and Indian IT stocks closely. At the same time, keep an eye on crude oil, gold, and overall global risk sentiment. Markets can change quickly, so focus on price action rather than emotions. These are today's latest updates. If you find this video informative and helpful, please like, share, and subscribe to my channel for more regular updates. Thank you for your valuable support.